Harry Dent explained how the massive baby boom spending trends peaked in late 2007, and we have been in a naturally slowing economic environment ever since, with unprecedented debt levels weighing. Hence, central banks decided to just print money non-stop to counter this trend. The problem is, we now have a global financial asset bubble at $525 trillion that is near twice the debt bubble it was designed to cure. He predicts this bubble will burst this year and shows that history says the first crash alone will be around 50% in 2 to 3 months, as occurred in 1929. He said that get out of risk assets now, into long-term treasuries, not gold, and back into stocks and risk assets between late 2022 and late 2023. This bubble started in stocks in late 1994. First tech bubble peak 2000 crashed 78% for tech stocks. And then we had the real peak of those demographic trends in 2007 and then the Great Recession. But then the unbelievable happened. Governments just said we can never have a recession or depression again. Of course, that's what it's looking like depression in 2008 at first. So they just printed money infinitely. We are in this endless printing cycle which goes against the real cycles, but the real cycles will win in the end, says Harry. This bubble has finally gotten to the point where it's about to end. When we have gotten into this bubble economy, when the bubble peak, much more devastation and everything goes down. Almost everything except for the highest quality bonds and cash. Harry says that this is going to be a reset of the biggest financial asset bubble, real estate, stocks, commodities, bonds. Almost everything is going to go down. And you are going to have to get out of the way of this in the next 2 years or so and then reinvest. We are in a unique time of unprecedented economic progress since late 1800s. We have seen more progress in the last 120 years than all of human history in economics, and we are only halfway through a bigger long-term cycle. The economy started to slow down after 2017, and we have been living off of quantitative easing ever since. Because the massive baby boom has been spinning less and less now. You are going to see the biggest crash of your lifetime, and it's going to be a once in a lifetime opportunity to load up on stocks and real estates and commodities and everything else. As per Harry, Bitcoin is the next big thing, but nobody has it and nobody understands it. This is a baby technology, a 1 to 2 years old here, and we are gonna see it bloom with blockchain like we saw internet technologies in the next 15 years, but not now. It's gonna crash first. When debt comes up, so do financial asset bubbles, but then debt deleverages as it did from 1929 into World War II and just after. We have had the next biggest debt bubble, much larger in all financial assets globally, and it started to deleverage in 2008 and 9, and then the central bank said that we can't have unemployment. We can't have banks and companies fail. So they blew their way out of it by printing money. We never deleveraged the greatest debt bubble in history after 1929. We are going to have to deleverage it in the next few years, and it's going to be short, sharp and massive. Governments are fighting this so hard. They sense every time the economy goes down, even though they stimulate harder than ever. They know that if this thing goes down, they are in trouble and the economy is in trouble. When the economy is going to boom and bust every 40 years, which worked perfectly until the 2008 to 9 downturn, and as they showed up, instead they just blew up the stock market. They couldn't get people to borrow money by making interest rates lower, because everybody overborrowed corporation consumers in the boom. So they just blew up financial asset prices, and that's what we have the greatest financial asset bubble in the worst economy in history. The worst recovery, 1.6% average growth. So you ask yourself, why would the stock market be having the greatest boom and bubble in history, when this recovery since 2009 has been the worst in all of modern history that we can measure, especially in the United States in our lifetime. Pushing down interest rates allows companies not only to save money on interest and borrow cheaper and all that sort of stuff, but they can buy back their stocks. They are not growing, but in such low interest rates and easy credit, when the central bank says nobody can fail and anybody can borrow if you have a heartbeat, they just buy back their own stocks. They have been shrinking their stocks to make their earnings per share grow up, and that's what correlates with stocks' overall earnings. We have not seen a strong economy, have not seen growing profits overall. We have seen the earnings per share market artificially created by central banks. If we keep pumping money in, it goes into financial assets because that's what they are buying, stocks and things like that. That's what happened. They accidentally found that we can keep the economy going by blowing up financial assets in at least the top 20%, especially the top 1% that owes those financial assets will spend more out of the wealth effect. If we go into downturn, the downturns can be led by stocks crashing in this bubble. Cash flow positive rentals and multifamily medical facilities at least hold up well. Commercial and high-end real estate gets killed. Best safe havens again in order US Treasury bonds, the long the better. Not gold, not Bitcoin, especially create cash and cash flow now to leverage the sale of a lifetime. This is similar to late 29 when Joseph Kennedy sold his stocks and companies whatever. When he was a multi-millionaire, got out of the markets, rebought stocks and businesses after the crash down 1989. The Fed has already constantly exponentially bought more financial assets starting with bonds and expanding to agencies and stocks in Japan and stuff. They keep buying financial assets to prop up the financial asset bubble. So what they don't realize is the debt bubble that started to come unglued in 2008, which is about $200 trillion in debt. Yes, you heard me right, $200 trillion. Now it's 250 or more, this financial asset bubble. They blew up the financial asset bubble to offset the debt bubble, and now they have this 525 trillion monster. Their biggest problem is they have blown up the financial asset bubble so big they don't have to worry about the con anymore. They have to worry about this financial asset bubble bursting, and then the economy follows, which is already the weakest in history if it had not been for all this stimulus. The COVID crisis was so extreme that it allowed them to step up and go extreme. We will realize central banks should only create money and emergency crisis and should not ever try to manage the economy top down again and set short-term and long-term interest rates. That's what created this bubble much bigger than it should have been in the first place, and it's gonna fail no matter what they do, says Harry. These guys are screwed. We just have to decide. The risks are getting very high right now. Harry says that in this June, that is about to crash and they are going to lose control, and you better be out of the way when they do. China has peaked in 2011 demographically, Japan back in 1996, so East Asia was the first to peak and then the US and in Europe, but Southeast Asian Indian, again some of the largest populations after China and East Asia, are just in their infancy. And in urbanization and demographics, India will not peak until 2055 to 65. So there is much more growth in the world, but you still have to realize that developed countries, even though they are about less than 20% of the people, there is still way over 50% of the GDP. We go down, the whole world goes down. The emerging countries, including China, which is already ailing, and it's going to have the worst crash, by the way, because of their debt and overexpansion. So guys, I would like to know your thoughts about Henry's prediction of the future. And if you want more such amazing videos, then please appreciate my efforts by liking this video, share it and subscribe to this amazing channel. I'll catch you in my next beautiful video. Till then, have fun.